All right, I'm starting the recording. What's going on, guys? We're just going to be going over a little scan, a little market overview here today on this Saturday morning. And then it'll be wrapped up, and we'll have what we're looking for to watch as far as next week goes. So, I was just talking with the in the call about how a lot of things in the market it seemed like a lot of people were trading like the crypto names. A lot of people were trading some of these miners that have really bad implied vol, and like the entry is just really not there. And I've been talking about how this is a game of probabilities, and it looks like, oh, if you're picky, you're missing out, and there's FOMO, blah 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 blah. No, no, no. It's a game of probabilities. It's just is this setup going to win over and over and over again? And no, it's not. Trading like this off of all-time high breaks, getting the retests, and technically the failure for the time being off of this previous all-time high. I know Bitcoin was hot, but you guys got to remember, trading like this on a consistent basis, it's not going to end well in 10 years, right? You have to think in much bigger perspective and much bigger probabilities. Buying extremely high implied vol on retests that aren't even like very telling or just not really there. I mean, I guess the volume did dry out. However, you guys got to think with the implied vol that is under these options, even just some chop, even just some digestion really, really, really cooks you. And I feel like a lot of people don't actually share the very, very bad things about trading these names. So you go over to something like Mara, same general concept over there, right? I mean, you got basically no really clean entry, maybe off of Friday's low. Do you really want to have exposure to what looks to be a major underperforming miner with Bitcoin being hot? See, that's where I think a lot of this stuff really just comes down to gambling. And basically, in my opinion, I think you're better off on the blackjack table. I don't. I mean, obviously, a lot of people don't agree with me, but I'm just sharing basically my thoughts here. I personally would rather play blackjack than trade this. That doesn't have to be you, but I'm just saying size responsibly with these things that um, you're not like finding really, really good ideal entries off of, right? Because you got to think, why is the implied vol high on this stuff? It's high because eh, it's an asset that basically has its value determined off of Bitcoin, right? And then there's a leader within the crypto names that emerges, and there's a leader that stays stagnant, and they all have high implied vol, right? So, are you able to pick that leader that just keeps continuing and squeezing, and it has the clean agreement with Bitcoin, and maybe you have some shorts that are getting squeezed out, and it really makes up for the implied vol that you're under on that option? Sure, maybe, but like, do I want to take that risk and that gamble, or would I rather just trade the equity market? Personally, would rather trade the equity market. If I had $10,000 of settled cash and I was thinking about Mara, I'd probably end up going to the casino instead. I would probably, like I said, rather play blackjack than buy these dog shit ass options. These are terrible. So, yeah, we go over to something like 40% quiet little Jimmy over here, Marvel. Beautiful chart this week, and I'm going to break down basically the schematics of just this whole entire accumulation. I was very, very confident about this. I talked about this chart for several days on end. I talked about how last week's, not last week's, but 2 weeks ago, the trading, uh, the price action there on the trading week was extremely, extremely quiet, right? It was very quiet as right above basically a bull gap, right? And it's a very, very minor, irrelevant bull gap, but it was more and less just each and every single daily low being a wick, and each and every single progressive new low being made in this trading week having there was no aggression behind it from a seller, right? You go into like your hourly chart because that's like my favorite for for looking for like a scam, like a trade, and you're getting lower high, lower high, lower high, lower high. Okay. But each and every single lower highs obviously doesn't have a lot of volume or a true seller behind it. So whenever we take out a previous lower high and we create a higher low off of where a previous lower high was, that would be labeled a break in structure, right? And this isn't even really a break in structure on the larger scale, because the larger scale is spring, sell test higher low, and then obviously just a nice big reaccumulation and a last point of support being established off of the range here that has been created within the confines of the earnings gap. So you get lower high by lower high by lower high by lower high. However, those lower highs are irrelevant. It's basically just healthy digestion and reaccumulation of inventory out of this range. Okay, so you always want to take a look at the gaps in the chart where there was a notable buyer or maybe a notable seller, and this was a big gap up and a notable buyer. And basically what happened was we gapped up above that area, and then we just could not progressively make new lows, right off of that range. It also kind of ties in with this gap right over here, if you would like to grab that, and it also kind of ties in with the earnings candle low as well. And if you go into your hourly chart, you're going to be able to see what I mean exactly, right? So this is actually the gap up in the low a day that was put in on that day, and then you take it into the whole entire trading week's perspective, and this had 1.56 progression within 6 days. 6 days. And then it gave it up right into the weekly candle close right after the dividend date. So you go into like your 4-hour, beautiful looking chart. It just seems like there's no supply anywhere within this range to even bother with thinking about this pulling back again. And obviously we have gaps up here that remain unfilled that are basically irrelevant. I'm not like, these aren't relevant gaps. I'm just saying that we have somewhat of a realistic target to start with for the trade. So that was your realistic first target. It will also take out these highs from over here. And then you go into your 15-minute, and this basically just flagged right on top of that into the Monday trading session close. This is why I really didn't scale much on Monday, and I was actually clear about that. I was talking about how I'm not really trying to scale Marvel. You're getting a really nice daily print on a decent volume increase. You don't need a lot of volume here. I don't know why people always look for this crazy increased volume on the break of the range. That's not necessarily ever going to be the true case for a chart that looks like this with so much digestion, because you got to think all of the inventory is in one side. It's all buyers. It's all sellers failed here. These are all profit-taking sellers. They're weak sellers. There's not a lot of volume. There's no progression being made. It's holding the progress of a buyer that was off of the earnings gap, right? So you got to think on this candle break, all the buyers have been established here. Technically, for a volume increase, you would have to have some sort of big seller, or you would have to have some sort of big bidder that got filled by a big seller. You would have to have both, right? And they were all basically over here on this candle, which were buyers taking profits, not a seller, not a short seller, not just like a, oh, defend the resistance seller. I mean, I guess you could say basically that, but they're basically profit-taking buyers who are simply just reaccumulating it where the initial progression was actually established at, which was 69.84, $70 psych. So you guys got to think, like I said, simple buy, sell, buy again. Like it's basically called rewashing, right? So they bought, they sold for 12% gain. They bought again, they sold for another 12% gain. That's 24% now. Very confusing stuff, super advanced, right? But we can see that in their intentions within the chart, right? I mean, we have so much digestion here. Another we had a trend break. I don't care about trend breaks, but we had a nice little trend break leading into the end of the week last week, and then that's what brought us the continuation. And now what the theory is behind the whole path of least resistance model is that, guys, this was a resistance that has been tested for so many times. It's been a resistance that has been there for so long, right? I mean, you're looking at this from this touch point to this, to this, to this, to this, and then another lower high beneath it. There is so much behind here, and the fact that the next following trading session, what happened was we broke out of the range, we broke out of this little internal base swing high, and then we closed up towards the highs, and up towards the upper range of the earnings candle, you guys got to think this is absorbed. This is all absorbed up here, right? So let's just delete that, and then we're basically just going to look for a push into the gap that nobody's talking about, because that's where the true liquidity sits. Look at the major volume behind this. Look at the major volume over here. This is within the range, but there's a lot of price action that's traded throughout that range. So you got to think all of the sellers that are sitting within this candle and sitting within the consolidation, they're consolidating within this bar that has a lot of leftover liquidity behind it. Do you see any consolidation up here, or do you just see a gap down followed by capitulation? So basically what I'm trying to say is there's no seller here. There is a seller up here. As you guys can see, there was a seller up there. Does that make sense? I feel like that's very simple stuff, and not too many people can read price like that. So this was probably the best trade in the market. I don't really know a better trade that really outperformed this, and then unless you're looking at like $9 like MSTR premiums that somehow went in the money, but like total gamble. If you're looking at that kind of stuff, I guess you could say otherwise. But as far as just quality premium goes on a quality chart with quality risk to reward, with quality targets, with quality everything, it's the best trade in the market. Not anymore, of course, but was the best trade in the market. So that's what trading's about, man. I would have had a flat week. I would have had not a flat week, because I did have some other wins that I'll talk about, but I had a relatively mid week other than this. I had a great week technically, but it was because of this, right? And I said right from the get-go, as soon as this opened up this nicely, I said I'm looking to lay off the gas a little bit, protect the gain that I made from Marvel, and think about rolling the charts that look relatively clean. So we had a lot of leaders emerge that came in on the October 7th flows, right? So that's a whole new rotation. That's a whole new seasonal flows period of strong flows, Vanna Charm, that are pushing up the equity market a little bit easier, because you have that effect of basically how the dealers are making an impact, how options are making a lot more of an impact, right? So we have to think whenever you have a leader emerging within that seasonal flows period, you have to identify that, right? And then you have to potentially think about rolling that. And one chart that's really special, that's really stood out to me, was CRWD, and I won twice on this one. It was just intraday trading, profit rolling, not anything too crazy here, guys. Just buy the dips, look at your hourly chart, look at your 15. Don't really get too involved with a 5-minute, and catch little minor pops on this thing. I'm not saying that you have to take this thing to a new high up at 324, or take this to anything up into there, right? You have to remember, we also do have a window of weakness. You have QQQ in a spot that makes longs a little bit risky. So that's, if the longs are getting a little bit riskier, and I'm thinking about the equity market pulling back, then I want to be looking at where those leaders were emerging on the October 7th flows. And that was CrowdStrike and PanW. These have been beautiful charts. They're extremely overextended from the daily and weekly perspective. You have a weekly gap, actually. That was a resistance. That was a lower high failure. Really low volume there. And then it broke through on really increased volume, pulled back on really low volume. You had a red to green bar on the weekly with volume drying up, basically telling you that a seller is a little bit higher up into this gap. If you didn't catch crowd on any of these days, I don't know what you were doing. I mean, I tried to, not to act like an asshole, but I really tried to like make it very, I really tried to put everyone's focus on this chart, because it's a beautiful chart, right? And we had a gap all the way up at 316 to 343, and the volume patterns beneath us were extremely bullish. We had, like I said, weekly gap, weekly resistance. That's also an earnings candle high. Pushed down, held for a secondary higher low, pushed back higher, held on the weekly chart of this weekly level. Got a rest day on Monday, which was the return of those flows on October 7th, and then boom, vertical right into the gap above us. So, and then we got a pullback. The pullback, yet again, off of the gap progression level, also off of this previous weekly level. Take a look at the weekly. Boom, 2-week resistance here. What happened? we held it, right? I mean, you go into the 15, guys, and this is just simply a orb that tried to push beneath, failed, got above the opening print, got a volume increase above the opening print, gave you another pullback. These are ads. These are ads here. These are ads here at 304, risking maybe 300 or risking the opening print if you have smaller expiration. Then we get above the orb into the trading session close. Then we gap up and then we basically hold the orb again the next following day. If you go into the hourly, very simple chart here. Bottom at 304, you sold them at 313. That's not bad, right? And then you could take another higher low. Boom. I did that actually on Friday as well. So these were just really nice, easy little trades here. And like I said, you can't have a big expectation of this thing moving like into a new high on OPEX week 2, leading into the window of weakness with like if data isn't really pushing price higher and it's sitting within actually a bearish NWOG, then with distributive looking patterns on the QQQ, then you can't have a lot of expectations for your longs. It's just you have to always have expectations in terms of risk reward. It doesn't have to be expectations for continuation. It's just you have to have a very defined risk off of a higher time frame level that makes a lot of sense. And that was CrowdStrike. So that retest there was really, really nice. That was, like I said, these two were leaders right into those October 7th flows. Here's October 7th, boom, vertical. You go over here, boom, vertical. Disney. Disney is a beautiful trade actually that I took yesterday, and I have half size on this. So basically, whenever you have a very strong tape, you would always want to think. I look at everything from just simple progress. I look at everything from just simple um, a buyer, why would a bid move up here? Why would a seller move down here? Would a seller protect their progress here? Would a bidder protect their progress here? A buyer should protect their progress here, and why? Can anybody tell me and pause the video and tell me why should a buyer bid this thing higher up into like the 96 and like 95-ish range and like basically above like this trading session low, or maybe sweep the previous trading session low and hold it and then move its way higher to like 97.57, which is this resistance up here that we haven't tested yet. Does anybody know? My beard is so itchy, dude. Does anybody know why they would protect this? Well, yeah. I mean, that's a absorption off of basically this 3 touch point resistance on the daily, followed by a breakthrough. You guys got to think, what's the progress here? What's the progress? Well, I mean, technically absorption is the answer. I mean, they absorbed all of the sellers that are sitting within this. But that's not really what I was just going to say, protection of this candle, right? So whenever you're, which is like generally the same thing, but whenever you're looking at this type of day for Disney on increased volume, this is October 16th, by the way. Go take a look at October 16th within the indexes and everything else in the market. I mean, it's just been a relatively flat day. I haven't looked at the S&P in literally 3 weeks. I'm literally not, I'm not even joking. So you go take a look over here on Disney, beautiful outlier candle that actually pushes through this gap. So we have to think this is just a resistance on the daily. Okay, we break through that area and we break through all of this resistance here. So what's the new progress? It's technically above the previous bear gap. All right, so this is where the bear gap closed, and this is where the new gap opened at over here, and it was a resistance. So this portion basically is what I'm trying to say, that broke through on the gap should go like this. It should be like a simple break, retest, or a little lower to the bottom, continuation higher, right? And just basically what the theory is behind it is just simple, it's just simple, what's the word that I'm looking for? Protection of their progress, right? I mean, I feel like that's the most easiest way I can put this. And why is it constructive? Can anybody tell me why this is also a very constructive um, and healthy wick to play off of the previous Thursday's trading session? I'm gonna go grab a cup of coffee while people answer that in general chat, but I'll be back in like literally a minute. Sorry about that, boys. I spilled coffee everywhere. But what was my question? It was about why was this Thursday's trading session low the place to play off of? Well, and why is it constructive? Well, this is a big resistance here. And does the whole entire resistance need necessarily tested into? Like, I know if the wick was a little bit lower, this would have been a beautiful entry on Thursday, right? But, I mean, you got to think here. As far as taking this risk off of like what would be 40 extra cents, first of all, is not like that worth it. But in a picture perfect world, it would have did something like this, offered two higher lows for entries, but it all it did was test the previous trading session high and hold it to the T, right? So that's a very constructive retest, in my opinion, to think about how, okay, that makes a lot of sense there. This is a very, very, very clean, high, tight hourly flag. So I'm going to take some ads here on the top of the gap, right? And I'm going to risk this hourly support because I'm basing this trade off of the hourly, right? So any sort of hourly close beneath, I'm out. And if you don't want to do that, which I didn't, well, I did, but I did it with more time. If you don't want to do that, and I also did have less time here, I just took ads underneath the opening print and figured, okay, if we get above the opening print, I'm holding. If we don't, when we reject, I'll close. All right, because on lower time, on less time of expiration, guys, you have to be a little bit more disciplined. And like once you see the rejection, and then if you see a new low, it's like we don't necessarily know how long that's going to take, right? And with options, it's dangerous. So this was the Disney chart, and basically just took the trade from Right over here at like 96.50 all the way up into 97.50. That's a whole entire dollar move up into the resistance where you had an opportunity to scale off of. I personally think this chart can move a little bit higher. I have half size on this, like I said. So if this could move, I think it's going to move all the way up into 99.28. You guys got to also think this bottom end of the chart is a fill of the Q3 2024 bull gap, or 2023, I should say, Q4 2023. And this was all constructive consolidation where you were getting a major change of character and like a really nice break in the structure. That then led to a really nice move for Disney from all the way down here at 89 to all the way up here at 123. So we do know whenever this name wants to be bought up, it has a lot of volatility behind it. And obviously the redistribution happened on a much on a much smaller scale. I think this is a bigger perspective of distribution. And why was I all over this down here? Does anybody know why I was all over this down here? What would a Wyckoff guy oh my gosh. What would a Wyckoff guy say about this over here? What would he say? What would he say? What would he say? I'll zoom out for you, go into the weekly. This is another chart where, like, if you don't make money on this, trading's going to get a little harder. Like, you got to make your day a little easier. You got to take advantage of a lot of these things. Downside accumulation into gap. Well, yeah, but we already talked about that, so that's not what I'm talking about. But what's another big concept? I mean, it's just a basic level here, guys. What happens after a spring? Can't see too well. You should be able to see it in here. Well, it's the preliminary level of accumulation failing. This is technically your shakeout. This is technically your structure development in your higher low. That higher low tying in with the preliminary accumulation area of support that failed, you go into your daily and it literally tested it right on the wick and it filled the gap, which is also a bull gap. And then it got 4 days of consolidation on that gap, and then it got really nice momentum, followed by, what does this structure look similar to? What does this right here look similar to? If you guys can answer this, like, I might need to, like, scream my fucking head off. What does this kind of look similar to? This right here. This pullback. It's not like it's not like picture perfect, but what does this little structure here kind of like, what does it look similar to on a chart that I have recently looked at? Peg? What's peg? It looks nothing like peg. Down here. Not really DKNG, but kinda. Yeah, that's not a bad answer. Marvel. I mean, it's the same concept. It's not the same. It's not the same like this right here. Like, can you kind of see that? Like this pullback, how it's like really weak. You go over to something like Disney. Obviously, this candle structure looks a little bit different, but I'm just talking in terms of like a concept to trade based off of. This is a really weak sell that took several days on end. Right back into basically where this bottom end gap was that started the bigger perspective of potential accumulation, which was off of this gap over here, right? This is the bigger, more important gap. These are just little gaps that, you know, if price protects, that's a potential entry. And we got a hammer candle off that. And we got a rip higher, boom. Then we got a retest. Then we got a hold of a progression gap from over here, boom. Right here, boom, boom. Then we got the profit roll, then we got the move higher, then we got the retest, then we got the fill of all these gaps and the tests into the consolidations, and then we got the pullback again, and then we got an actual retest of what would be a previous resistance, turning now a support. We also took out the previous higher low, and then we held it, right? So we're not taking it out and breaking it and basing it, we're just holding it for another support, right? And then we push our way higher, then we break through the gap above us, then we retest and go, right? And if you're not catching it over here, and which I don't blame you, then, or maybe you're catching it whenever you identify the outlier strength that kind of happened over here on like a retest, and then it had a beautiful close, but this is still a good entry is basically all I'm trying to say, with risk right off of like 96.19, which is the top of the gap. You go into the daily, beautiful low a day and orb actually established right off of that area. So you got to think about like Disney over here, like, oh my gosh, okay, if I get my hands on shorter expiration, I take it above the opening print and then it finds really nice momentum up into the close. I could take this thing all the way up into 97.57, right, with a risk off of like basically not 96.19 and your entry being like 96 like 50 or like 45. 25 cents of risk, a dollar of reward minimum, right? And that's taking full scale off of 97.57. You don't have to do that. You could set up an ask order up here, but you don't have to do that. So that was Disney. If we go over into the other charts that I have, I got a really nice entry on this one, and I tried to. Um, this wasn't really too much of a planned trade. It was just more of an alert I got price-wise because I was looking at this thing to get above the gap level, which is basically right over here at 33.50. This is technically the gap, guys. Technically, right here. Right, I just wanted to see a daily print over it is basically all I'm trying to say. This is the gap candles low. The gap candles low was a beautiful area to thinking about an entry off of. We could get rid of this. And basically all this really was your secondary lower low within a bull gap that brought us an accumulation, right? You got to think in terms of like if you fail a previous trading session low within a bullish gap, and then you break back above and you hold the previous levels that need to be held, then this thing is going to squeeze its way higher and recorrect itself in a recorrective state all the way back up to this resistance up here at 35.50 and eventually even higher up into the resistance at 36. Right, so you got to think if you're taking ads over here off 33.50 or you're taking ads on the previous trading session off of 33 or 32.50 or even off of this orb or opening print 32.50, whatever it is, with a reward of 36, 35 bucks, 35.50, guys, you can't beat that kind of trade, especially when the daily chart looks absolutely beautiful, right? This is the biggest volume that we've actually ever got ever since over here, which brought us a 20% mark up. So you guys got to think of like effort versus result and compare the effort versus the result on different price movements. I mean, this is a ton of volume, 31.5 basically 31.5 million volume and plus 20%. You go take a look over here. This is almost the same volume on a re-entry opportunity. Like this over here, I mean, yes, it did move up almost the same as this. This looks a lot bigger because it's an intraday like price action, but there wasn't really a clean entry over here. You got to think like I would have loved an entry on off of this candle, right? And you technically got it from over here on the fill and off the retest. That was a beautiful area to think about taking that. But you go take a look at this bottom end of the chart, right? And you have similar volume, except they're giving you a beautiful low by lower low into a bull gap type of retest and potential to long. So the EMAs I think are curled right beneath. Yeah, it was an undercut on Thursday. It was a reclaim on Friday. I have some lighter size here, about half size. So I do have some hedges to my QQQ short. This is exactly why I've been saying you guys gotta catch the really nice charts and then play with the profits off of those charts on minimal size, right? So it's not really something you can. It's not really something you can look over. Sorry, I was on my phone. Yeah, this is why I never really posted public stuff, because, like, nobody watches it on Twitter anyway. Everyone's like, oh my God, post one, bro. And then they don't watch it. Waste my fucking time. Anyway, let's go over another chart. Alrighty, let's go over into, like, what should we go over, boys? I took a loss on Roblox this week. It was a little sloppy of a trade, I can't lie. I don't really care because I was half-sized and I was clear about that. I figured, this could definitely push down into the 618. This could find a little bit more constructive of a higher low. I kind of just liked where this thing closed and how it closed on Thursday or Wednesday, I'm sorry. But on Wednesday, we closed right beneath that gap level, right? So basically, we're formulating out some sort of like high tight daily flag. This is your little flag. I mean, I'm not a flag guy, but you guys get the point, right? And then we tested equilibrium. We actually held equilibrium, and then we had an inside day followed by a nice little move higher. That move higher closed ever so slightly beneath the gap level. Keep in mind, guys, this is not a gap from here to here. You have to always remember what is the actual gap. It's a 9% gap down. So the top of the gap's a critical level to hold. And we just couldn't close above, man. I'm an asshole for taking this. I really am. Big time asshole. I kind of went against my rules here. What I should have done, what the better thing to do here, guys, is just simply wait for maybe the cool off, maybe an entry down here, or if it wants to break the next day, just take a retest, right? I mean, there's going to be a retest somewhere within here. Or just take the breakout and risk the gap level, because it's likely not going to be given up on like an hourly chart. Okay, buy some time and then target back up into the upper range over here, because I think that this is a big candle that's going to dictate a lot of direction moving forward whenever you see candles like this. It's kind of like how QQQ had a ton of volume off of the bottom area footprint candle that filled a gap from over here, and it was technically a gap down and a lot of progress made from a seller. But you got to think, when you're getting these gap downs, if there is a buyer intraday that absorbs everything and really rips it right back higher up into the top of the gap, there's a buyer with intent off of that candle, right? And this is also off of previous gap fills. I probably should have bought the dip on commons with these. I wasn't really aware of it. But this was a really nice chart. So I'm not too mad about the loss here because it was just half-sized off of looking for momentum on the next following trading session's opening print. But the only thing is that I held it for a little too long. I never added to it though. I just cut it because I was like, you know what? There's no signal to add to this. This thing's really weak, and it got a nice little decent gap up. Basically, what I wanted to see was a nice little gap up, a hold of the gap level, and then boom. And my ads were like over here at like 41, maybe even a little lower, right? But I had ads in these general ranges at like 41, 20, 40, right? So this little retest here was not really, I wasn't really looking at much drawdown on the retest, right? But it got the big failure right off of the open. That's definitely your signal to cut. If you don't cut, you're going to probably see more drawdown. I didn't cut like an asshole. And then basically what this did was trickle back down into obviously this low from over here and eventually into the golden pocket, and then started to see a nice little close there to Friday session off of the golden pocket. I tried to retake this thing over here on Friday session, again, light size, and then I added to it off the golden pocket to simply just mitigate, get the position back to break even, and then reevaluate it next week. That's exactly what happened there. It actually was a small little gain of like 8%, but like I don't call 8% wins with options wins. That's not a win. But yeah, I do like the chart still. I do. It's going to be one that's hard to ignore just because I have a skewed risk to reward entry on it up upper above, and then it fails on half size, that doesn't mean that I'm not still watching the chart. I feel like a lot of people get in that really bad trading habit where they're like, oh, this chart let me down. I can't watch it no more. Like, no, you can't do that. So yeah, Roblox is going to be on focus for next week, and that's basically what happened to it for me for this week. That was a poor trade for sure. I mean, everybody makes mistakes. It's just part of the game. I actually lost, I think, 3 trades this week, and Roku was the other one. And I actually went against my plan and my rules. Go take a look at what I said about Roku, technically. And this thing moves kind of with Netflix. And what have I been calling with Netflix, guys? Distribution, and I've been correct. I mean, you guys can take a look at the markup all you want. I'm talking about I've been looking at distribution at the higher highs and looking at higher highs fail since this high from over here. We failed. We failed, we failed, and we failed, right? These were all very, very optimal short side entries. And then obviously what happens is this basically just going to be a completed distribution on a smaller scale? Because you have to think, I don't necessarily think that this is my target the whole time on this was just a gap. I never said that this was going to mark down to low 600s. People really uh, they get confused about what I say with like distributions. Like all I'm saying is that this is a higher high distribution that should target this 690. My second target was 640 or not 640, 660. You guys could go back on my Twitter and take a look at the whole thing. I said, I'm taking this thing down to 690 or $0 of profits. I was short all the way up here, never got the breakdown, basically just held the previous daily level for multiple days on end with no volume. So dumb. Probably the biggest blue ball that I've ever dealt with in my life. And then what happened was we got the markdown leading into that earnings because they wanted cheaper prices. They wanted to fill the gaps and get some orders filled leading into that earnings, and that's what happened, right? So not really much we could do about that over there, but this was distribution that was leading into the report, right? So we have to think about like we have a weaker looking chart. You go over to something like Roku. Same like industry basically, a little bit different in terms of like it's with the growth basket a little bit more, but this is just like creeping up on a relatively weak daily range that's leading into the secondary retest of a massive bear gap, right? So I was figuring, okay, if this sweeps here, this is going to be a really nice trade. And what I did, it sounds a little dumb, but what I did was, and this is just really dumb, like it is dumb, because I did go against my rules. Like, definitely went against my rules here. But and it's funny because the level that I was actually eyeing up held, but it was through the Netflix report. That's why Netflix is important here. But what happened was we swept the previous high, and then I was trying. I added off of like almost near open because I thought we were going to push and break out, and then get a retest and a hold and go a little bit more, but they liquidated this buyer off of the open, and then I tried to add into the 78.61. I didn't have a lot of size behind it, but we got some sort of like hammer looking candle, but then this was all just one big sweep with volume drying up. And once I saw the volume drying up, that's when you know you have to cut. And this could have been an actual really nice short side trade. If you guys go take a look at what I posted on Twitter in terms of the Roku chart that I actually had over there. It was a beautiful trade. Um, so here I'll actually post it in general so you guys can see what I was looking at in real time. Or if anyone wants to find it for me, all you have to do is go to my profile and search up Roku, and then go to media. I'll find it. No big deal. Or latest, my bad. Here we are. I'm gonna screenshot it and throw it in general here, and then we'll see how I was looking at this one. Sorry guys, I just like to go into full detail when I go over something because I like to talk about what I see in real time, not just like hindsight stuff. But if you guys take a look at the general chat, it was a two-side focus, right? A lot of people had a long side bias with this thing, but it was just a spot on the chart where there was much more risk to reward short side than there was long side, two-way trade. I feel like a lot of people were very late to this one since we broke through the 72 gap on that soft CPI, and not enough people were identifying that 3 or 4 lower low accumulation on the daily. So then we sweep into the gap, and a failure towards the 80 psych would bring us a new lower low and a draw beneath 72 into the gap fill at 70. So I wasn't really thinking about the Netflix report at the time, right? But you guys still have to think. I mean, this is, like I said, the 80 psych. It's a big fat failure off of that area, as well as this previous swing high at 79.65. So you have a big wick to risk off of there, but it was a really nice intraday trade short side after you see this nasty 15-minute print coming in off of the open. Just basically a disgusting sweep. And then obviously you would want to de-risk that into the Netflix report, right? Because we don't want to gamble earnings. We don't know the direction on the earnings. So yeah, that was the Roku chart. Netflix is really messing with this one, so it's probably not going to be a focus of mine. What's another one that I can talk about? Is there any other chart that I had this week? I mean, this week was a boring week. Like I said, I mean, I took some small losses on some lighter size trades. I rolled a CRWD. I rolled a couple contracts on PanW. That wasn't really a great trade. I don't really like to share those trades because I talked about it in the video. I just didn't talk about it in the Discord. But if you guys watch the videos, I talked about how I was rolling contracts over there, but they're spreading, and it really wasn't an optimal entry. So I those aren't the greatest habits, I should say. Oh, D-Dog. I traded this one a little bit differently this week, but this was a really nice trade. Like I said, I'm just simply looking to roll profits on some of these, and I took it was a kind of a bad entry, but it was a really beautiful chart. It's just a simple break into the gap, fill the gap, very low volume retest to the bottom of the gap, hammer candle off the bottom of the gap, momentum back to the top of the gap. I mean, it's just the same trade over and over, right? Very simple stuff there, guys. This was also kind of right off of your 9 EMA on the daily. If you want to take a look at like volume shelves, by all means you can. I mean, I'm not a big volume shelf guy, but that was technically the biggest volume shelf on the daily. I see. I don't need that because like levels make more sense to me than old volume on a chart. But it had a really nice confluence there. Yet again, I don't really like to talk about entries that aren't really perfect. So because I educate, like this is education more than this is alerts and going over, oh, buy this and hold it until I sell. No, I'm teaching people how to actually be able to do it for themselves, which is much more difficult. So this was a beautiful roll on D-Dog. Just a really. Is there a correlation between level shelves and respected levels? Yeah, to a point. Basically, what the VPOC is suggesting here is that, first of all, there's a lot of volume off of this. And then if you zoom out, there's a ton of consolidation also off of this, which is right over here. So it's kind of irrelevant, right? There's a lot of volume right over here that was transacted through the gap. That's also in that territory. So, I mean, yeah, it's kind of irrelevant, but like, I guess it's a confluence. There's nothing wrong with a confluence at all. I think this indicator kind of sucks personally, but yeah, I mean, I'm not saying I'm right. If you go into the 1 hour, it wasn't the cleanest look. If you go into the daily, clean look, and it's just risking that low. So the risk reward wasn't great. I have shares here, and I scaled some into the top at 130. It's not like I'm a big believer in this for long term. I think this is accumulation. And the reason as to why I traded this one as well was just look at this weekly chart, guys. This is our biggest volume. This candle was a draw to the big volume widespread candle. I talk about that a lot as well. This is your big volume with a big large body on it. And then we got higher lows subsequently, followed by breaks of these weekly levels, as you guys can see. 1, 2, 3, 4, 5 weeks actually of a weekly level that was a resistance. This was also a previous weekly support. So very, very historic, respected level there. And then you go into the daily, and it was a clean break, risk the orb low, target the top of the gap. Beautiful chart, really nice patterns there volume-wise. Just really nice increase on the break, just beautiful. Snow, I'm probably going to be watching Snow next week. Kind of something similar to CRWD, how you sweep into a gap and you don't really get a lot of volume off the bottom ranges of the gap. So I think that the draw is eventually going to have to be a little bit higher. If we do sell with the general market and this does find a new lower low, I feel like the trade becomes a lot better with this finding like a bigger, better shakeout into then a break above a higher low and then a last point of supply. Maybe it builds out a lot of stickiness on top of the range, and then it builds out a last point of support, my bad, and then you get a really nice move and a draw back up into where this swing high currently is. This is a much bigger schematic that's going to have to play out with the window of weakness into those really strong seasonal flows, into that heavy gamma within the January OPEX chain, and then obviously once those expire, I think a lot of these bottomed range accumulations are obviously going to lead to distributions, or maybe just the leaders are going to lead to distributions. I personally think we get a UTAD after a lot of that open interest expires in the January chain on NVIDIA. So yeah, we'll see. But I guarantee you that's right. So make sure you bookmark that because I'm going to be right. Yeah. Does anybody have any questions? As far as like other charts go, so CELH is going to be on watch. Probably CRWD again as far as long side. Snow, and then Disney. So those are my long side focuses. I feel like they have the best. Oh, CVX, yeah, good, nice catch. I mean, I would have caught it by Sunday. I'm kind of just doing this little call in the. This is beautiful, man. Oh, I'm ready to trade this one. Especially if tech gets weakness, which I think we do in this window of weakness. I think that this is going to be beautiful. I think that this is going for the upper trend line. I don't ever use trend line targets. I know. It's just kind of how I feel the chart's going to play out. I think that this is going to reach up into, I should call it weekly resistance instead of the trend line. I see, like pulling a trend line and like saying, oh, it's going to test the upper trend line, bro. Like there's no, you're not identifying like big money and how big money moves. Like it's not, big money cares more about the flat levels, right? Those flat levels being like, where is their liquidity to unload off of, right? I mean, there's a big buildup over here and then a breakthrough. There's a lot of stops up here that need to be rated, right? There's a lot of consolidation up here that I feel like we could test into. There's also a little mini gap. I just think if we hold this range and really digest on top of this with a sweep of a previous weekly level, and then a hold, and then subsequent higher lows, and then pushes higher, holds of progression gaps on top of the ranges, and then inside bars right up there on diminishing volume with technically a lower wick here, that is a beautiful chart. Tell me how this is not so clean. Thank you for bringing that up to me, to Django, because I did talk about how I really like this chart. It's just I kind of forgot about it. But I have a notebook that I would have remembered on it. I like to talk with the members about these things so they can study them with the free time that they have, because that's important, right? You always got to think, like, if you guys know about charts for several days on end and then they play out, and I use a lot of, I have a ton of conviction behind them, that's a lot of material for you guys to learn off of, right? Like my most conviction, heaviest size trade that I've had was Marvel. and I've been very clear about that. Even on Twitter, like I try to help out Twitter people. I don't even know why. I really don't. I have no idea why I'm on Twitter. I think it's honestly more or less just an addiction for fucking entertainment than it is like even there's literally zero purpose to be on there. But I talked about Marvel a lot. I talked about how it's the best trade. I talked about how it's next. And when you guys know about that for several days on end, that's something for you to study. So, um, yeah, I mean, just a beautiful, beautiful. Oh man, this chart's beautiful. Amazing. You guys also know you might not be able to see it on the daily. This is the earnings gap progression. There's another gap right here. Look where our weekly lows off of, or actually our double weekly lows. This is the gap from here down into there. It's actually a decently big gap. Not huge, but that's where the resistance is off. So whenever you're holding above that area, you could give yourself a smaller little window here of execution and technically take this from where the earnings gap is to the more recent gap that actually broke us down. But it don't really matter. I mean, basically, I'm trading this next week, bro. 100%. Oh my goodness, this chart, bro. This is so nice. Oh man. Well, I think that's going to be it because I want to watch some football today. I'll probably go over some short side trades after I actually find something. So I do expect to do a call here soon. Or I'm sorry, not a call, but like a well, yeah, a call. Yeah. Like a call like on a weekday. And the calls on the weekday, like I can't really plan those guys, but like I feel you guys gotta realize like I mean like sometimes I get pretty busy, so it's like if you guys are typically not too busy at a certain time of the day, maybe at like 9 p.m., like I could be at the desk talking about stuff for the next trading session every day at 9 p.m. And it gets a little tiring posting charts every day and typing them all out and all that kind of stuff. I mean, I will do it and I am going to do it, but like a call is very convenient and I could record it and just upload it. But if you guys are able to make those calls, that would be great for me too, because sometimes it's like I burn time typing things and it doesn't allow me to really dial in on, like I'm not making excuses or anything. I'm just saying it saves me time and focus if we were to just do a call. Um, Feel free to record these. 9 p.m. to is like 3. Oh, okay. Then maybe we can work around that. Yeah, I don't want to leave you out, but um, I like to really dive deep into a chart, and that's just tough to type out like 18 paragraphs a day. It's the only issue with like the charts channel. I mean, I could leave it simple. I could leave it more simple, but like I said, this isn't really about me guiding you down what trade to take. It's more and less about me teaching you and jamming the information in your head. So, and I enjoy doing it. Like I love these calls on these Sunday mornings. Like these are fun. And I feel like they prepare me a little bit more as well as you guys. So, yeah. Yeah, so CVX is a really nice chart. As far as the other charts go, ARKK, beautiful chart. The weekly's beautiful here. This is a path of least resistance up here of this weekly resistance. It's been diminishing volume and consolidation off of a weekly level for 4 weeks. 4 weeks, and we're trading right back up, really breaching into that resistance and closing our weekly print right into it, like right under beneath it. What does that tell me? That tells me that I think a seller should really step away here and move back and get a little bit more value for his shares all the way up here into 52. Therefore, I think ARKK moves to 52. pretty simple stuff there, boys. Man, I have heartburn. Ugh. Nice little trend break on the weekly. I feel like we did put in our constructive higher low, given the fact that we're consolidating for 2 weeks off of a previous weekly level. Please keep that in mind there. So whenever you're going into the daily and you see, oh my gosh, it lost this. No, what's going to happen? You got to think higher time frames, guys. What is this building out here? Is it going to get bought up and just consolidate down there and eventually get a nice, decent looking print, maybe for 2 weeks in a row? Probably, right? So you can't like when you go into a daily chart, you got to also think of the weekly perspective. And this got a really nice break through that gap on one of the cleanest prints that we've seen in this whole range. So I do like this one. Do I really want exposure to it? And do I think growth looks a little bit better than a full growth ETF that has a lot of exposure to Tesla? I think I like growth more, personally. So I'm going to pick apart some ARKK names to talk about as secondary focuses. And I don't really want exposure to Tesla, especially that we have earnings, especially that we can mark this thing lower into the previous accumulation range, especially that we can maybe fill some of these little hidden gaps within the chart, and this could mark down for cheaper prices into an earnings beat. And that could be the thing that gets ARKK rolling, because ARKK's heaviest holding is Tesla, so you always got to think like when you're trading an ETF, you have exposure to a bigger basket that you might not even realize. Like, it's sad to say, guys, but a lot of people don't think of stuff this way. Like, what would you rather have? The risk to reward based off of also the Tesla chart is and the rest of growth, or just growth? Personally, I'd rather be just growth. So if Tesla remains stagnant, that's cool, and it might. But if it sells into the report, which it looks like it might, yeah, I'm not a huge fan of ARKK until we get past that report and how good Tesla looks. So it's not going to be something I'm so gung-ho on Monday morning, like, oh, ARKK breakout. No, not happening. So yeah, that would conclude the weekly review and just talking about trading. I feel like vol is going to get a pop. Buying vol post OPEX is typically a good idea. I could hedge my port with VIX. I don't think there's really a point. I don't know how the premium is looking. I don't know how much better this is than index options. I think VIX open interest is at like really low. Well, it's a pain in the ass, but it's used to hedge, so it's really not that big of a pain in the ass. It's like you buy a hedge and you just walk away. Don't even like think about it. I mean, volatility resets, like that one thesis I had whenever UVXY was in that whole massive move higher, and then typically this was pricing puts at COVID levels, and then you go take a look over with like UVXY. The premiums are so jacked up here that you could sell. By the way, what I meant by vol reset was more or less selling premium to Django, because it was so jacked up premium. And very, 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 what's it called? What's the word I'm looking for? Oh, QQQ. Gap. Yeah, that's where that was. And these put premiums on VIX were priced at COVID levels, right? So it's a great area to think about like selling those, because the market's just not going to keep plummeting like that, or at least just like open up shorts on UVXY to gain as much leverage as possible with smaller amount of money. And this was a beautiful, nice big drawdown all the way back to the lows of 66%. That's what I talked about in terms of like the vol reset that we would have next week, and then we got a gap up into that next week. So it was like a beautiful opportunity to be like, all right, yep, boom. You're always going to get a vol reset whenever VIX goes that high, and you're in a bull market, and you have dealers hedging downside, and it's all based off of a bearish narrative and an overreaction to. It wasn't even war. It was like that yen carry trade bullshit, which that's not going to plummet the Nasdaq. I don't know why there's so much fear around shit like that. It's so cringy. I don't get it, and it's just like people get so involved with the market as an options trader whenever that's not really the time to be an options buyer. You're buying premium under a VIX that's at fucking 65. And I was guilty of it because I longed Nvidia all the way down here, all the way up into like shares though more than options. But I also did take options on this NWOG setup that we had. And when we talk about an NWOG, boys, this was a big NWOG. Fridays close, Mondays open. Fridays close, Mondays open. Higher low into data. They micro distributed into data. They reaccumulated for a higher low on top of gaps into data. Same thing with Qs. Top of gap, higher low, reaccumulation. And then technically these are probably shorts up here also. So whenever you push above that level, shorts need to mitigate or just liquidate their positions. And this is what happened. They got liquidated on this move higher, and then they mitigated on the leg lower. So they likely sold off the remaining inventory a little bit passively up at these bear gaps, and then they just mitigated their positions lower into the retest of the macro level off of 448.64. That's why my schematic on QQQ played out literally to perfection. If you guys want to see that, I will show you real quick before I end the video. Check this shit out. Pretty funny. Can you guys see this or no? So this was the previous, the videos would be able to see it, but this was the previous bear gap, and they were going to push it back down into where shorts needed to mitigate, and then push it back higher, and then obviously start to look for those new highs up into these gaps. And that was on 829. 829 was right over here, and then it pushed right directly into that spot. More shorts mitigating off of that area and covering. That's why we get these really explosive moves off of these little wicks on a ton of volume. If you guys want me to, I'll post that in general so you guys in the call can actually see that right now. It's in general. Does that make sense? All right, I felt like I taught a lot today. Hey, Dad, I gotta. That sounds so weird. Your Discord name is Dad, but hey 1297. I got a That's hilarious. I got a DM from your buddy. I'm gonna have to ask him some questions and probably wait for maybe a little bit more of a group to join since I don't let individual people in at once. It's kind of a pain in the ass, and I wish I could, but it is a pain in the ass with how like the email system works and everything, and I have to start that book too. So I'm gonna wait for like maybe a couple more other people that maybe want to get in, and then I will get them in if you want to let them know about that. So, yep, that would be it for today, guys. I'll post a recording. The recording is an hour and 8 minutes long. Jeez. People have some material to study here on this video. I don't know if they're going to use it. They should, though.